So this is how I'll spend 150 euros or $150 on these 3 ETFs on the US stock market. Before I show you how, let me tell you something most people don't realize about investing. You don't need to find the perfect stock. You don't need to predict the market, and you definitely don't need to check prices every single day. What you really need is a strategy. And for me, that strategy in 2026 is to build around 3 ETFs. 3 ETFs that quietly build wealth and create financial freedom. If you are a beginner and you don't know where to start investing in 2026, this video will help you out. When I started investing, I used to think like most beginners. What if I choose the wrong stock? What if the company collapses? What if I buy today and the market crashes tomorrow? These were questions I was asking myself. But that fears will disappear the moment you understand what ETFs are. Because an ETF is not just a company. It's hundreds or even thousands of companies in one investment. So instead of you betting on one horse, you are owning the entire race. That brings me to the first ETF that I am going to invest in. So the first ETF is VTI. That is Vanguard Total Stock Market Index Fund. This is the ETF that represents the entire US stock market. These ETFs invest in large, medium, and small companies. So when you buy VTI, you are basically saying that I believe that over the long term, the US economy will keep growing. You are not guessing which company will win. You are betting on the entire US economy. VTI is one of the best ETFs on the US stock markets, and it's gained 18.96 in the last 1 year. Imagine you invested in the US stock market 20 years ago. I mean, some companies failed, some disappeared, some also became giants. But the stock market as a whole kept moving forward. That is exactly what VTI captures. So if Apple or Microsoft grows, you benefit. If a small company becomes the next big thing, you also benefit. This is why I call VTI my foundation ETF. In 2026, if the market still becomes unpredictable, I want something that quietly compounds my money without any drama. And that is why I chose VTI. VTI expense ratio is around 0.03% with a dividend yield of 1.12%. Out of my $150 or $150, 60 goes into VTI. So I'm going to use an app that gives me an opportunity to invest in both US stock market and some Ghanaian fixed income markets, which is called the Plus app. If you want to know more about the Plus app, please check my channel for more videos on Plus. If you don't have an account on Plus, you just go to Google Play Store or Apple App Store and download, then register your account. So if you don't have an account on the Plus app, you can download it on the Play Store or App Store to register. So I'll click on Open. So I've logged into my account. So what I need to do is that I already have portfolios that I've created. So I'll check out my portfolios here. I've already created a portfolio. If you've not created a portfolio, you can just create a portfolio, select what you want to use it for. If it is about business, education, or other, you can select the title. Let's say house. I want to build a house. So if I want to build a house, I select other, or maybe, yeah, so I'll select other. Then I can click on, are you saving towards a goal? If yes, you can do that. If no, you can just do that and click on create portfolio. That is all. So over here, what I'll do is I'll click on the invest. Then I'll click on the US stocks. Then over here, I will search for VTI. VTI, click on search. So I'll see VTI here. So this is VTI. So far, the market is closed as at the time I'm recording this video. But I'm going to show you how you can do that. First of all, you need to deposit money into your account. You can see that over here, my US cash wallet, I have nothing in here. So I'll click on deposit, the amount that I'm going to use. So $150 will be around 1,800 cedis on the app. So I'll click on next. Then I'll click on confirm. I already have my Momo wallet in here. So you can add in your Momo wallet. Then you can click on add payments, select the number you want. If you want card, you can use the card to do that. I already have that. So I'll click on it. Then I'll go to next. Then I'll click on confirm. So I'm going to get a pop-up that is going to ask me to enter my PIN. So after you've made your deposits, click on done. So I'll go to invest, then go to US stocks up here. Then I'll search for VTI. Then I'll select VTI. You can see here that it says the market is closed. So I'll click on buy. Then I'll select the US stocks portfolio that I created. So if I want $60, I can just select $60. But for the purpose of this video, my account is not up to that. So I'm going to use only $11. I'll click on buy. So the price per share of VTI is around $342.4 as I'm speaking. And 60%, $60 will go into this amount. So I'll click on confirm. Then my order has been successful. So this will be processed when the market is open. So I'll click on OK. So you can see here pending US stocks. So now let's talk about the second ETF called QQQM. That is Invesco Nasdaq 100 ETF. This ETF focuses on the biggest growth and technological companies in the world. I mean, think about the companies shaping how we live today, right? Like your phone, artificial intelligence, cloud computing, electric cars, streaming, online payments, and so on. Most of these companies live inside QQQM. I chose QQQM over QQQ because it has lower expense ratio of 0.15 and higher dividend yield of 0.5, higher than QQQM. So when people say tech is risky, they are not wrong in a short term. Investing in a tech company is very risky. But what's about long term? Technology isn't going backwards at all. Let me put it this way. Imagine avoiding the internet in the past year, that was around 2000s, because it felt so risky, it was new. Or avoiding smartphones in the year 2007, because that is what avoiding technology long term looks like. QQQM allows you to participate in that innovation without picking individual tech stocks. So if one tech company is not doing well on the list, other companies will carry the ETF. So imagine if AI explodes, automation grows, and cloud computing becomes more powerful. QQQM benefits more. This ETF is more volatile than VTI, yes, but volatility is not an enemy for a long-term investor. So instead of me trying to trade tech stocks, I hold QQQM and let time work for me. That is why in 2026, QQQM is my growth engine. QQQM gained over 23% in the last 1 year. That is incredible, right? So out of my $150, I will spend 50 into QQQM. So let's go onto my app and show you how I can invest QQQM on the Plus app. So I'll go back to invest, click on US stocks, set for QQM. So I'll see it there, Invesco Nasdaq 100 ETF. So I'll click on buy. So as I said, $50 or 50 euros goes into this. Then I'll click on buy. Then I'll click on confirm. So now QQQM has been purchased successfully. I'll click on done. Now let's talk about something most beginners ignore. That is dividends. They want stocks that go up fast, but they also forget about income. That is why this third ETF matters so much to me. The third one is SCHD. So this ETF focuses on strong companies that make real profits, pay consistent dividends, and also increase those dividends over time. Even if the market is flat today and the prices are not doing well, you are still going to get paid. SCHD has a dividend yield of about 3.82%, which is very high, and the expense ratio is only around 0.06%. So imagine you own shares in companies that sell products. People buy no matter what, like food, drinks, healthcare, energy, and so on. These companies make money in good times and bad times at the same time. And SCHD collects those companies into one ETF. So instead of chasing price movements, you are only building cash flow. Even in market downturns, dividend-paying companies tend to fall less, and when market recovers, you already collected income along the way. In 2026, with interest rates, inflation, and global uncertainties, I want part of my portfolio doing one thing, that is paying me dividends consistently. That is why SCHD is in my portfolio. Out of this 150, the rest is $40 that goes into SCHD. So I'm going to set for SCHD on my app. Then I'll click on buy, select my US stocks, then select the $40 or 40 euros as stated earlier. So I'll click on buy, click on confirm. So my order has been placed successfully. I'll click on done, and that is all. So these three ETFs on my list are not competing with each other. They are there to work for me. VTI gives me broad market exposure, QQQM gives me long-term growth, and SCHD gives me income and stability. So instead of asking which one is the best ETF, the better question should be, how do I combine them to match my goals? Let me give you a simple way to think about it. If you are young and focused on growth, you lean more into VTI and QQQM. If you want balance and income, then SCHD plays a bigger role. If you want a peace of mind, then diversifying your portfolio with these ETFs does the heavy lifting. Personally, I like to mix these ETFs. That lets me sleep at night while my money works for me. The power of this ETF is not timing the market, but rather time in the market. If you invest consistently, monthly, quarterly, or yearly, and you let compounding do its thing, the result speaks for itself. You don't need to rush or be perfect. You just need to be consistent with investing. If this video helped you, please like and share this video. And don't forget to subscribe if you are new here. I'll see you in my next video.